HINANCE news. Mr. Big Short investor Michael Burry is warning us that stocks are going to crash and that rallies won't last. He's been tweeting, y'all. Hope everybody's having a good new year to start off. Someone like me, I don't like to hear that Mr. Michael Burry is saying that, crashes are set to come. But I want everybody to understand what's happening. If we break down the basics, when interest rates rise at a rapid pace, statistic and history shows us that the stock market is going to crash. So I understand that from the perspective of rates are continuously rising, and they're saying that they're willing to raise rates to a Paul Volcker level, which is like 20%, which is crazy. So Michael Burry tweeted on January 1st, of course, that inflation peaked, but it is not the last peak of this cycle. We are likely to see CPI lower, possibly negative in 2H 2023, and the U.S. in recession by any definition. He very specific, U.S. in recession by any definition. That means no matter which way that the House tries to make it seem and change the definition or what they perceive as a recession, he is saying that by any definition, we will be in a U.S. recession come 2023. Fed will cut rates and government will stimulate, and we will have another inflation spike. It's not hard to understand. So what he's pretty much saying is that, yeah, inflation peaked and it's coming down only because interest rates rose and people are spending less. But this is not sustainable to continuously raise interest rates. I cannot speak today. Shout out to all my future millionaires watching this right now. I figured it's a great time to talk about the Future Millionaires Discord chat. So if you're interested in joining, shoot me a DM above on my Twitter or Instagram. I'll get you the details to join. But yes, so we do know that inflation has peaked. But if this is going to happen again, if they're going to continue stimulating, as we just seen, California just gave out checks to a bunch of people, which stimulated that economy and created more spending into the end of the year. But obviously, the more we print money, the more inflation is going to be higher, the more less people are going to get out and work. We need to stop giving out free money as a government so that this can all even out. And this is why I kind of believe it, because if we can't come to that understanding that we need to go through some pain as an economy, we may be too prideful to go through that pain. I don't know. They say that 2008 was like a fluke as far as us receiving the pain. We are going to need to go through some pain as an economy in order to kind of get through this without having to raise rates. I mean, it's all part of the cycle that they're working on. But hey, let's see what the comments are saying, y'all. Okay, how do I make money from it? People are so something else, huh? People are something else in the comment section. The claim that inflation peaked is not supported by evidence. Inflation is a complex phenomenon influenced by a variety of factors. It is not possible to accurately predict its future trajectory with certainty. Well, he said it's going to happen again. He literally said that. And we will have another inflation spike. Yeah, that's how charts go, y'all. I would say you could say inflation peaked if it went up and came down. Everybody's going to have their own definition. But, hey, listen, and that's not to say, we had a question in the chat today. Shout out to my chat. People in the chat, shout out to Mario, shout out Ross Stock, shout out Will TV. Anybody else out there that I haven't mentioned, shoot me a comment. Definitely always give y'all some shout outs. But someone asked today if we're looking at a bear market year, and a good portion of it could be the recovery year. Every time the market dips, it needs time to recover. I mean, it could be 6 to 8 months, could be 12 months, could be 18 months going into 2024. That's what the outlook is potentially looking like. But there's opportunities here, and I'm really starting to ask, what other big catalyst could there be to really tank this whole thing, like Michael Burry style, where he's saying another 50%. I think there was a lot of analysts that predicted S&P 500 to be trading at 36, 34, by end of year. And I think, shoot, they were pretty much almost there. They were almost there on December 30th. Well, December 30th started going up. 36 though, that's a pretty good. Some people were saying 42 by year end. So I think we still get this 37, 36 for the S&P 500. Obviously, Tesla stock is really getting pounded right now, which is somewhat ridiculous. But we're not. That's a whole nother debate we're gonna go into. So we weren't even gonna do that. But I don't know. There's opportunities here, and I think it's a great time to. I'm not a financial advisor. I just sharing what I'm kind of doing and how I'm looking, how I see things. Obviously, if they continue to raise interest rates, it's part of the cycle. When interest rates rise, stock market goes down. That means less growth. That means growth doesn't get rewarded. So if you're invested in anything that is all about growth, like Tesla or like a Beyond Meat or like a cannabis industry, you're not going to be rewarded in this style of market. But that doesn't mean that there is an opportunity for you. So do what fits best for your portfolio. You can always ask me questions in the comment section below. Again, shout out to all my future millionaires watching this right now. If you're interested in joining the Future Millionaires Discord chat, shoot me a DM above on my Twitter and Instagram. I'll get you the details to join. We're just trying to build, a community around financial wealth. Hope to hear from y'all soon. I'm signing out.